So as we talked about over the weekend, I feel like this week would be fireworks in the market. And it turned out to be the case with yesterday's theme being, as I told you guys, trust no one. And it feels like today's theme is, I don't know what to believe. And this is sort of the uncertainty that we're facing. And the wild swings are just absolutely unreal. I want to show you guys some headlines and share my thoughts. So first, as you take a look at this, regional bank stocks rally following Monday rout. And essentially, there was a lot of fear in the financial, right? So you had the failures of Silvergate, then you had Silicon Valley Bank, and then you had Signature. And so then all these things were crashing, right? First Republic and Comerica, KeyBank, Charles Schwab. And then we had a rebound. It's like, I'll show you the chart on this one. It was First Republic. I think at one point it was like 70% down. And this was in a day, which is unreal. And then it had a recovery. I think it was up like 20 or something percent today or something like that. And if you did buy it at the very bottom, I think you could have picked it up around $20 and was it out now 40? So you could have doubled your money in a day, which is ridiculous. This to me is a really, really unhealthy market. And the basic panic, and I'll give you a couple things to think about, was how many deposits do these banks have that are insured or uninsured? How much underwater are they in terms of their long-dated bonds, right? What kind of decisions they make to lock up cash? And are people pulling out money or not? It is really complicated. And the reason why I mentioned I don't know what to believe is because you're getting different stories coming from different places. I want to go through some more stuff, but sort of why I have these feelings about the market. Yes, there is opportunity, but this carries a lot of risk. So, for people who are brave enough or foolish enough, if you want to look at it, because there's a fine line between courage and foolery. I'm being honest. It is funny. You did okay. You obviously, could have doubled your money if you caught the bottom and sold at the top, assuming that you did sell, or maybe you're holding on, who knows? Charles Schwab was another one. I mentioned this one because in my opinion, Charles Schwab is one of the good guys. It's one of the few banks I actually like. This is real. A lot of these big banks in the USA, I just feel like they inundate you with crazy amount of fees, be it, your Bank of America or your Wells Fargo, JP Morgan, this kind of stuff. But to be fair, if you're investing in said banks, those fees bring you, shareholders' money. But, as a consumer, I prefer these kind of sort of, I guess you say regional bank, has a more of a hometown personal feel. However, they've definitely been at risk. I mean, you look at something like this, if you were, say, buying like your Signature Bank and, trying to buy the dip, it's not even trading. So just always be aware. There is real risk. And until you get burned once, you kind of think like you're invincible, but the risks are real, guys. I always want to emphasize that. The other one that we've been watching as well is Bitcoin. It's been on its tear. It's up 23% in the last few days. So banks are crashing, Bitcoin's going up. I know that the Binance is sort of like pumping it a bit. Whether or not this thing is the thing of the future, who knows? That's anyone's guess. My personal opinion on this stuff is that you can trade it. I'm not necessarily, bull on this thing, but yes, you can totally trade it. And I do get it. Some people do think this is the best thing since, I don't know, we'll call it raw honey. Bitcoin, you heard it here. Bitcoin, the best thing since raw honey, right? It's a joke. But yeah, it's been doing all right. And kind of the sort of the thing of I don't know what to believe is, you get so many mixed messages. You get CEOs that come out and say everything's fine, and you get regulars saying everything's not fine. And one of the lessons that I've learned is you follow the money, which is not a crazy thing to say. So, yesterday it was Wayne, that someone in the community was saying that they did well on First Republic, but they wrote in the comments that the reason why is because he was saying, he saw somewhere that JP Morgan was buying up First Republic, right? And this is an example of, we're talking about Silicon Valley Bank here. This says, Bailout tightens away purchases from Silicon Valley loan book. It was over the weekend when they had a deadline. It was like Sunday at 2 p.m. It's because essentially Silicon Valley is controlled by the FDIC right now, and they're trying to find a buyer, and there were no buyers. And that brings, obviously a lot of pause in this thing. And now I see it's like KKR, Apollo, and Blackstone are maybe looking at buying some assets from Silicon Valley, but the deal's out there. I think essentially what they're doing, they're trying to say, you know what, if we're going to come in and bail this, you out, essentially you got to give us a spectacular deal. And this is sort of like, everyone's saying different things, but, are they buying or not, right? Follow the money. This is sort of why, people say, people vote with their feet. You can also say people vote with their money. And this is the kind of stuff that you want to track. The other thing too, you can take a look at this. The U.S. Department of Justice is like looking into whether or not there's any criminal activity. We got reports earlier that, the people who are the execs of Silicon Valley, they think they were selling stock. They were, giving out bonuses as well. And I mentioned before on the channel, right? On the surface, it doesn't look good. To be very frank, it doesn't look good. If there's anything illegal, who knows? That's what the Department of Justice is looking into. And again, I don't know what to believe, to be really frank, because we also know that they were buying off politicians that's talking about Silicon Valley Bank. So this is sort of where you just don't know. And there's a lot of information that isn't, that we aren't privy to, right? And this is sort of why I'm keeping it real with you guys. And I understand. In the world of YouTube and sort of the news cycle, et cetera, you need to act like you know everything and like you can predict the future 100%. And then you pretend like you got every call right. I don't do that. I just tell you flat out, I don't know what's going on over here. And I can tell you what I read, and I can tell you there's some sort of investigation. And I can also say, this is also real. Sometimes the final story that we may hear. So for example, let's say they decide to jail a couple of bankers. I think it was a really a smart comment someone wrote, was like, well, if we can go ahead and say, hey, we're going to jail bankers, and that they're, the problem for all of this thing, and then like push any blame off from anyone else. That's what they'll do, right? That they'll pick a fall person or fall guy, fall girl, however you want to make it out. But I don't know. I don't have any predictions on this one. It is just so crazy right now, the markets, guys, and I hope you understand why I'm saying it this way, because I just don't want to ever like give you bad information. I'm giving you my honest opinion on this stuff, because here's another example. And sort of this is the one that really sort of bothered me the most. Charles Schwab feels heat after SVB collapse. So I read through this thing, and evidently the way that we get information as just regular people, we're getting like, say, a month-old information, 2-month-old information. And the whole gist of it is that we know that interest rates are going up, right? So with that, we know. We also know that many of these banks, like a Charles Schwab, for example, are underwater in terms of locking up money in long-term bonds. We know these kind of things. And the other thing, too, is interesting is that, according to this, it was saying that customers are essentially pulling money out of Charles Schwab and putting it into like, high yield accounts. Because essentially, if you say, for example, have your money in Charles Schwab and whatever it is right now, we'll say like 0.5% or something like that, like kind of low. And you could put it somewhere else and you get like 4%. I mean, obviously you can do that because you don't necessarily want your cash to be doing nothing, especially if you're sitting on a whole bunch of cash, right? And so this was saying that Charles Schwab has outflows. Now, what's odd is that then the Charles Schwab CEO goes on TV and he's like, no, we're not having outflows, we're doing fine. And then I'm just like, I don't know what to believe. This, and I'm being honest with you guys, because it's hard to say. Honestly, it's hard to say because I'm getting two different reports. That's why I'm being honest. Like I don't know. Because here, and this, but also go back to the first point. People do vote with their money, right? So certainly this says Schwab CEO rebounds. The CEO Bettinger says he bought 50,000 shares. So right now, this is all about instilling confidence, right? It be it Binance buying a Bitcoin, say, hey, the crypto industry is fine or whatever, we're going to be jolly and start tweeting out that everyone should buy it. Or the Schwab CEO saying everything's, rosy and fine, we're managing our money well. And in fact, I myself am buying up stuff, right? And that might be true, but it's like, there's always a conflict of interest with information that you get. And I'm be perfectly honest, guys, I don't know what to believe with this kind of stuff, because it's weird to read that people are pulling money out, yet the CEO is saying that they're not. And I was just like, I don't know. And I guess my point of view on this stuff is because I come from I'm older, to be perfectly frank, I'm pushing 50, and I lived through .com bubble. I lived through 08, 09, and I can't stress it enough. Sometimes people lie to your face for money. It is a real thing. Now, I like to believe that Charles Schwab is one of the good guys in terms of the banks. I like to, and that's why I mentioned that before. And so if they break my trust, I'm just like, oh my God, all bets are off. But some of these other banks, like say the First Republic, for me, I wouldn't have taken that trade, or really frankly. Like, yes, I can come out and say, oh guys, I'm the master trader and I bought it at 20 and I sold it at 40 and I doubled my money on a YOLO. Yeah, I could tell you that. It would be a bunch of hooey. The reality is that generally speaking, for this kind of stuff, you want to go with sort of what you know, what you understand. And if you have any particular information that would, bring to light why you think that would be a reasonable thing. So for me, Charles Schwab, I think they, have a good customer service. I like the experience there, and I don't think they're necessarily going to fail. But, when I'm reading that, yes, people are voting with their feet, pulling out money to go into higher interest things, that makes sense to me. And then when I read what the CEO is like, no, that's not true, it makes me feel kind of weird, So I don't know what to believe. I'm just being honest with you guys. I'd love to hear your guys' thoughts on this one as well. And here's another thing that's kind of weird. And there's so many headlines going on today. This is why the market is so confusing. And it's sort of why I made a video yesterday about managing risk, right? So even if you do believe what someone is saying, or you do believe some information that you're getting, it doesn't necessarily mean you do YOLO anything, because who knows? Some of the information, unfortunately, could be bad. This is another good example. So you read the headline here: after Silicon Valley Bank failure, there's going to be more, and that's from the former FDIC chair William Isaac. I actually saw an interview with him also, and it was very interesting. So again, this is the former FDIC chair. He was calling the Signature Valley Bank thing a bailout. And there's been debate, whether that's a bailout or not, but I'm saying this is the former FDIC chair was saying that. And he was also sort of making the case that the current regulators today have gone too far, which I think is quite interesting. And this is a bit strange to me, because usually these kind of people may stay silent for this kind of thing. I'm not quite sure what the benefit is of him doing that. Who knows? There could be some sort of wrangling going on behind the scenes politically, and he's got, some bones to pick, that kind of stuff. It could be a situation, but I want to make it clear, though, in these situations, not everyone is necessarily agreeing on what should be done behind the scenes, right? Not necessarily. Yes, when the report came out on Sunday, it was saying that, the FDIC was on board and the Fed was on board and Yellen was on board. Who knows what they're really saying behind the scenes? Yes, in public, they're all coming out and saying, yeah, we have to save it. We have to save the system. 100% they're saying that. But behind the scenes, I don't know. I'm not privy to these, private meetings. And this is something that I just want to be aware of to you guys, is that people may not necessarily be telling the truth of these kind of things. I've lived through this stuff before. It is crazy. Here's a good example again. Credit Suisse finds material weakness in financial reporting. And, the Credit Suisse CEO is going to come out and say, everything's fine. All those problems that you heard about, that was in the past, but today we're doing great. And the basic gist of it was the saying, the last couple of years, maybe their books haven't been accurate. Maybe, the reporting is not so good. And they even delayed the current year one, because I guess they don't want to get in trouble further. So it's I don't trust anything that they say, to be perfectly frank. And this is, if you don't know about Credit Suisse, there's the bank of criminals, essentially, because the way the banking laws over there are is that, you can get money any number of ways. You can give it to them, and as long as you give them the money, they will protect your information, these kind of things. It's Switzerland, you guys know how it is. And I don't trust this either. So this one has been crashing as well. It is just a wild market, guys. And this is another one, right? Signature Bank. The headline is: Signature Bank was seized after leaders caused crisis of confidence. And the basic gist of it is sort of what's being reported is the regulators were asking for more info about deposits and their books and stuff like that. And they would, send stuff over, and then the regulators would look at it and be like, I don't know if this is accurate. I don't know if we believe it. And they're like, okay, fine, we're just going to go and take it over because we don't trust anything that you say. That's literally kind of what the whole gist of it is. And this is, again, I don't know what to believe. In this regard here, I would probably say, the regulators saw something that they thought was systemic, and this is sort of what spooked the whole market, and you had First Republic go down. And kind of the data that people are looking at in terms of First Republic, I think that was one of the targets of sort of why it crashed on Monday, is people are really, really worried that a large bulk of their deposits, I think it was 70%, something of that nature, were uninsured. So people aren't sure. And right now what's going on is the government, and even Biden, right? The president comes out and tries to instill confidence everyone in our banking system is fine. I'm just telling you guys, I'm being honest with you guys. I don't know what to believe. And this is sort of why I think managing risk is your best bet, and making sure that you are protecting yourself. It doesn't mean that you just buy a whole bunch of guns and throw cash in your mattress. It just means that in any decision that you make, it's balanced. I think that's the best way that I'm thinking about. So I'm not necessarily freaking out. I'm just saying I'm looking at this stuff, and it's hard to really trust anything, to be perfectly frank. It's funny because today I thought we were going to be talking about CPI data, but the banking system, I think, is probably the more important story, to be perfectly frank, because if the banking system isn't working and properly functioning, then everything shuts down, right? Even Moody's here, it says even in the headline, Moody's cuts outlook on U.S. banking system to negative, citing rapidly deteriorating operating environment. And so it's what is going on? And then it's funny, then the CPI data becomes your second headline, not even that important. And if you do want to know, yes, we still have inflation, but I'm sure you guys already know that. Nothing necessarily new there. But the question is, what's the Fed going to do? Let's take a look at the numbers of inflation again. It's funny that this isn't necessarily the lead. U.S. Consumer prices 6% at tricky time for Fed, and the Silicon Valley Bank fallout. And this is where we are. I mean, you can see it. Inflation is still hanging around. I mean, you can see it right there. So it looks like here, what was it? I think that was around June was the peakish of inflation for us. And then you can look at, month over month. It's basically what it was before. That's all I have to say. It's not making huge moves one way or the other. I would say it definitely is cooler. That's why I showed you guys the peak back in June. So yes, it's cooler than it was before, but it's going to be sticky. And some of the things that sort of stood out to me, so this is year over year. You can see food is up, energy's up, this kind of thing. I believe shelter's up as well. Yeah, this is 8.1. Those are the kind of things that are going to stick around, because on your daily lives of your average, American, is your home expensive? Yes or no? Is your food expensive? Yes or no? Is your energy expensive? Yes or no? And you already know the answer to this. And we also talk about job security, right? So you already know things are tough. Now, the thing that sort of really has kind of stuck out to me, and this has been something that you've been seeing a lot of headlines coming here and there, and it kind of pops up every now and then, but basically keep an eye on consumer debt, because as interest rates go up, as we saw how it creates stress in the banks, it also creates stress with consumers, especially if they've been using, their credit cards essentially to pay for food and electricity and stuff like that, because essentially they don't have enough money coming in to offset the costs that keep going up, which is what we see here. Also, too, you can look at month over month. This tells you both for the same thing, but shelter is the one that really stood out to me. And transportation is up as well. You guys can see this. Facebook Meta, I guess they're going to be firing yet more people. There's a headline. Facebook parent Meta plans 10,000 job cuts and new round of layoffs. It doesn't sound good. So the 10,000 people who are going to be laid off isn't going to be like right away. They're saying it's going to be over some months, but I think this is going to be a trend. Now, not everyone overhired. I was looking at this. It was Apple. They were saying that they're going to be delaying bonuses, and it was a limit hiring, right? But they didn't necessarily overhire. There were some charts on this. So one was, actually two things. So one is their sales are probably going to decrease, right? So I think we already know that. I've talked about these guys before, where you can sell a whole bunch of phones, what's $1,000 phones, this kind of thing. But like, how often do people need to, buy yet another new phone, especially with the economy slowing? So Apple's probably expected to slow down. And here, in terms of the hiring, you can see here. So they didn't really hire like crazy amount. Other companies were, more like a hockey stick kind of thing, right? But Apple wasn't really like that. You guys can see that for yourselves. So they might not necessarily be doing the cutbacks. And I think for companies out there, if you looking for opportunity, these kind of things, is you probably look for the ones that were well managed. Did they go crazy and over hiring or not? So something like a Meta, Facebook, the other thing that they're doing as well is they're going to be cutting back on their more experimental stuff. It's going to be the same with Apple. And this is sort of where we're looking back, sort of what's going on in the market is going to go back to the basics probably, next quarter, where our company is making money or not. And that's why I brought up the consumer. If the consumer doesn't have enough money to buy such expensive phones, then certainly you're going to see a downturn in earnings. The other thing too, which I think is an interesting one, is there's been a bunch of articles about this, so you can read the headline. Social media postings amplify anxiety over SVB collapse. And basically what was going on is, and I was reading it as well and sharing you guys the info over the weekend, essentially, or even before that, people were tweeting out, I think the, SVB is having trouble. And it was like Peter Thiel is one of the big investor people, was like advising all his buddies and colleagues to pull their money out, et cetera. And essentially you had a bank run within like a short amount of time. In this day and age, when something, essentially feels like it's not worth the risk, and this SUV was the example, like there wasn't enough incentive to keep your money in there. People are like, you know what, I'm just going to move my money to somewhere else. Now, evidently, people have been moving their money to the bigger ones, be it your Bank of America, JP Morgan, et cetera. And so this is sort of why there was a fear that this was going to be widespread, where everyone's going to be pulling their money out of this smaller banks and just going to the big mega caps, because it's not like every bank's going to go to zero, because people want to put their money somewhere. And I don't think necessarily everyone's going to do the bank of mattress. It's just not that particularly practical. And that's sort of why I asked you before, sort of in your neck of the woods, do you think the average person is concerned about the banks? And what's kind of funny is, let's say, for example, when Biden comes out on TV and says, hey guys, everything's fine, we're doing great. It's like, for the average person, they're probably like, did we have a problem? Like, what? And it was kind of like a situation with Coinbase. This was last year, when Coinbase was like, okay, guys, we're not going bankrupt. And it's, wait, what? You're going bankrupt, right? That kind of stuff. So, this is sort of why I go back to this, like, I don't know what to believe, because when people come out and seem to, say protest too much, you kind of wonder like, okay, are you telling me the truth? Like, why are you so adamantly, defending your bank? And so this is sort of why I told you guys, yesterday the joke was, I've been getting emails from some banks telling me that everything's fine, and I haven't been getting emails from other banks. And so like, I'm not sure, should I be more worried about the ones that aren't emailing me, or more worried about the ones that aren't emailing me? So, and in that regard, right, if you don't know what to believe, this is my opinion. That's why you sort of manage risk, spread out your risk to different things. And also too, we have this great community to support each other and, share opinions. So that's my opinion on the market. I know it's kind of wild and convoluted, but honestly, I'm just trying my best to tell you guys the truth. And do be careful out there. There's a lot of people, this is real, that frankly, basically lie to your face. And this could be on YouTube, this could be on Wall Street, this could be anywhere. And so just be careful. Thanks again for watching, everyone, and I'll catch you guys next video.